Live analysis. So ahead of the Fed's favorite, as I keep saying, and I'm referring obviously to the personal consumption expenditure from US. So based on that, I decided to do a live analysis. So together to go through the results of the PCE, and also what that means for the Fed, what that means for the dollar, what that means for the US economy, etc. So, let me make sure that everything is okay. I can see some of you start joining us. Perfect. So, okay. So, just before we move on, before we see actually the results, which are in less than 6 minutes from now, okay, I would like to provide a bit of a briefing of what happened so far this week, okay, where we are standing, okay. So obviously, if you are following us in LinkedIn or in any social media, or we try to keep you up to date with live commentary. So you are aware, obviously, for the fact that we have seen some key moves this week in a compo, because of the compo reasons, other than the central banks, which we had Bank of Canada this week, we have Bank of Japan, we had ECB as well. So Bank of Japan, by the way, was just comments, rumors, speculations about intervention, etc. We are in the mid of a Middle East crisis as well, so that uncertainty remains at the back, but also the data are not helping at all the markets to find some relief, let's say. Okay, I can see your comments, Annie. Let me just quickly brief up before we see the data coming. I don't want to cover gold, dollar, yen, and euro dollar right now, because they will all obviously affected by the release in 5 minutes from now. So I want the release to be out, and then we discuss together the results and what that means for dollar and the weeks ahead agenda. Okay, so right now, guys, where we're standing is, let me share actually dollar for now. Okay, here I had a dollar cat, by the way, but let me just flip quickly to the safety of dollar. Here is the dollar index, as you can see, stuck within a ranging market for nearly a month's time so far. So still failed actually for a second day in a row to extend and break this ranging market that we have seen over here. We zoom in just to go to the 1 hour chart, just to see this uncertainty, this ups and downs. So basically, we have seen a bit of a strengthening on the dollar today, okay, regaining and hitting to a possible weekly gain, but it's we still need to see the PCE. What we have seen so far. Hello everyone. Hello Jafet. Hello everyone. So as I said, so far it was a very important week with the sentiment shifting all the time. So we have seen the stock markets slightly higher today. It's Friday, is the end of the week as well, but after suffering significant losses so far this week, it was, as I said, a combo of things. First of all, have always in mind that even though for next week the Fed is expected to pause, to hold the policy unchanged, however, the earnings season is not really helping to just to it doesn't help the markets to actually not confirm, but actually rely that this is the peak of the tightening. In contrast, the mixed to disappointing earnings releases so far, especially from the tech giants, is something that added further pressure on the stock market and led to significant sell-offs this week, with key support levels broken this week. We're gonna see later on what I'm talking about precisely from S&P 500, Nasdaq, and Dow Jones as well. So but yes, it's we have the still hawkish central bankers, the disappointing earnings season so far, okay, at the mid of a really high interest rates, the data which are just adding further inflationary pressure. So the data so far, the economic data so far, uh, present that inflation will hold high for longer. Okay, so that's why the possibility of rate cuts, not only for Fed but also ECB, has been pushed back. Has been pushed, if I'm not mistaken, for the second half of 2024. And even beyond that, for the Fed, it was actually at the last quarter of next year. And also, the scenarios for another rate hike in December is it keeps gaining ground. Okay, I would like to remind you durable goods or the US GDP that we have seen yesterday. We're just a minute away from the release, so I'm gonna share the calendar instead. Okay, guys, I'm gonna share the calendar. Give me a second. Come on. Here we are. Okay. Okay. Start coming up. So, my friend Kayoshi over here is like supporting significantly gold, as I can see, gold and pound. Okay, I'm gonna shift to dollar there just for the sake of seeing the reaction. This is the 15 minutes chart just to see the reaction. So what we have over here, we have personal consumption, personal income deducting a bit at 0.3%. You see, yes, you can, from 0.4 expected and 0.4 last month. The personal consumption expenditure steady compared to last month, but missed expectations. So the expectations were 0.3%, but instead it came higher. So that's the monthly reading. The core lower, mid expectations, but also revised lower. Okay, that's a very important. So we have seen a revision lower in both headlines, core and the PCE. So while we have seen actually the monthly reading to the upside, both in the core, the PCE and core as well. So let me just shift quickly to the dollar. Anything you need, I'm here to help. I can see that you want some analysis. Just give me a second to make sure that okay, here we are. So a bit of indecisive over here. Let me see Bloomberg. US indices remains to the upside. They haven't reversed any gains for any of their gains so far. So what we have seen over here, let me just okay, so what was expected, by the way, the fact that the PCE, as I have seen just now, the fact that it revised lower from last month, and there is a slight growth in the monthly reading, is something that it presents a slowdown so far in regards to the and we have the decline of dollar index, okay, of dollar index over here. Let me zoom out. Okay, we have a decisive pullback. This is the 15-minute chart in the dollar index. So apparently, it seems that spending has grown. Income, however, has detected. So let me just find the full report. I want to see the breakout of it. Because we need to consider also whether there is any rise on the working hours and the hourly earnings as well. So to figure out the breakout of the to check actually the breakout of the PCE and what that reflects what that reflects in regards to the compensation and government social benefits as well. So currently, they were 147.9 billion increases in PCE in October. So that was an increase of 85 billion in spending for goods and 61 billion in spending for services. Okay. So that explains this pullback in dollar a bit. The fact that the consumption has revised lower in September, but we have a steady slight growth. It's just it doesn't really, even though it shows that it's something that could consider being positive for the Fed, because it might mean that indeed we are seeing that the high interest rates are working in order to control the inflation. However, the fact that it was just a slight revision lower and sorry for that. So that means that even though it missed expectations, it came slightly lower, it also revised lower, is not enough, it seems, to take out of the table the one more rate hike within the year from the Fed. So it wasn't enough in order to imply to further slow down on the another rate hike in order to push the inflation down. Sorry, I missed a bit my words. I was seeing the comments and I just blacked out. So this based on the data, okay, let me sum up to a bit. Based on the data that we have seen, that the PCE is not taken out of the agenda, as I said, that even though November, so next week, Fed will hold policy unchanged. This reading doesn't take out of the table the rate hike for December. Okay, so this looks to be this swing lower from dollar looks to be just a limited move, a bit of a correction. So this reading, the reading that we have just saw, from a theoretical perspective, should support dollar further. Okay, obviously we have just had the data out, so we need to be a bit patient to see whether it will settle and we will hold the 106.40 level. Okay, so that looks to be temporary, but we're gonna return to the dollar in a bit. Okay, so So let me check whether there's any further briefing in the regards to the PCE. There's something that I missed. Okay, I'm coming to your questions. Let's see everything together right now. Okay, I'm getting dollar back to the 1 hour chart, and I'm moving back to the gold, which is everyone's favorite, if I'm not mistaken, because you keep asking me about dollar, the gold all the time, everyone. So what do we have? Okay, gold from Ani. Kayoshi is a really supporter of gold right now. Uh, Gold analysis, please. Of course, of course, of course, of course, of course. Okay, guys. Okay, let's take it step by step. I imagine that you are asking me for any intraday for right now for the short term, any the direction in the short term. So what I'm gonna do is just first of all, I'm gonna start with a very tight time frame, obviously the 30 minutes chart, okay? And I want to emphasize a bit on this rebound that we have seen, okay? On this rebound that we have seen at 19 from 1980 higher above the pivot point up to 1984 territory. Intraday, the gold is moving sideways between 1980 to 1990 territory. So this swing might found some further ground to the upside, okay? Slightly one up to 19, and the next resistance is pretty much on the 20 period moving average, so somewhere just a dollar higher. However, I should clarify at this point that there is not enough signals for a reversal back to the 1989 territory. Okay, look at this. MACD is at 0. RSI is at 49. It increased but remains below 50. My fast moving averages, the yellow and green one, which are the 5 and 9 exponential moving average, the setup that I use for very short time frame, they are pointing higher, but they haven't crossed each other, and they don't really have a sharp slope to the upside. So I'm not saying that it will revert right now, but I'm saying that this swing, this upwards move, it looks to be a bit limited. So if I put the 15 minutes chart on, we indeed have this bullish cross from the 5 and 9 exponential moving average, but with RSI at 53 and flat, MACD negative, and stochastic below 80. So I'm saying that there is a bullish bias, but limited one. Okay, limited one. So intraday, we see some support with the next immediate resistance level at this latest swing, 1987 territory. Okay, that's the immediate resistance area for in the very short time frame for gold. Okay, so basically it's 1987 and the top of the range at 1990. Okay, however this support, this boost, it looks, yeah, significantly limited actually. So yeah, it looks that however, okay, let's move on. I will move on to the higher time frames. And I would like to show you some price action trading over here. First of all, I would like to show you, this is the daily chart. Sorry for that. Okay, so I would like to show you this sharp correction. Okay, here we are. Excuse me. Okay, here we are. Sharp correction, breakout of one, two, three, four, five, six months resistance has broken last week, with gold keep extending higher and having these short-lived corrections before another attempt to the upside. So in general, the gold outlook remains positive. Okay, it might look that it's running out of steam based on the last few days and the small body candles struggling to break and to remove, actually to move up to 2000 territory. But momentum, let me just add my momentum as well, indicators on. However, technicals and fundamental analysis, so I'm referring to the fact that we keep having several central banks indicate that they have on their cards at least one rate hike within the year. We have the Middle East that is causing a lot of safe haven demand for gold. Okay, we have also pretty much the risk aversion, which is boosting the safety of gold, of oil as well, of Swiss, and so on and so forth. So, see momentum aggressively to the upside. If I put the 4-hour chart, you can see that there is a rise, a rise, a rise, a bit of a pullback, a correction, but stalled. So this means that it's facing, because it's anyway, it's Friday, it's the last day of the week. We're gonna have the closure ahead of the weekend, but the fact that that is holding gains above 1990 indicate that the asset could return back to 2030 or even 2070 highs. But in order to confirm something like that, guys, you need to stay focused and you need to keep an eye on the tonight's closure. Okay, any indication that the asset holds above 1975, which is the 61 Fibonacci level, it could suggest that that it could return back to 2000 territory, and the break of the 2000 territory could just open the doors to 2030 and etc. So let me just, I want to explain further, because I can see several of you, many of you actually, being just gold lovers. I could say that, if I could say that. So I would like to spend a bit more time regarding gold, and later on oil as well. But I want you to to remember that any speculations, any narrative, either coming by Fed comments, either coming for US data, either coming from earnings season, any narrative, any speculation that there is a higher for longer rate narrative, that's something that could take some of the shine from gold. However, because we are in the middle of a geopolitical crisis, okay, this doesn't have a significant impact for the time being to the gold. With other circumstances, if we don't have all these geopolitical concerns and uncertainty around and etc., the higher for longer stance could push gold down. This is not happening because of the geopolitical crisis, okay? And let's not forget that the assets, the markets have already started pricing in, actually pricing also the possibility of the cuts and when the cuts will take place, okay? So yes, someone is saying for dollar, weak dollar. So as you can see, it still hasn't settled, okay? That's the 30-minute chart, the reverse, long tail. Here we had a huge boost higher, and then it's keep moving higher. But that the floor of the day, or the immediate floor at least, at 106.30 still holds. Okay, so the overall, just here we are, sorry for that. Overall, it sustains some gains still. Okay, there, it sustains some gains, so we need to see the asset. In order for the outlook to change, we need to see the asset reversing significantly and more precisely below the 106 territory. As long as it holds above 106, or even 106.30 more precisely, this is actually indicates that it could close with weekly gains. Okay, so so in regards to the intraday basis on gold, let's not forget that 509. Let me get back. Here we are. So for you, for any scalper, intermediate, intraday trade, etc. So as I said, that was a limited move. So as you can see, my fast moving average have already flattened. So keep an eye on the pivot point and on the 1980 territory, which is the bottom of the day, because it seems that the consolidation remains, with currently the momentum to be neutral to negative. Overall, however, gold has recovered significantly in October, returned back to multi-month territory, multi-month resistance. However, only a break above 2,000 could open the doors to the April's highs. Momentum remains strong, RSI remains strong, candles keep posting higher highs. We have a bullish cross of the 50 and 200 moving average. So for the time being, overall momentum for gold is positive overall, while intraday we have some consolidation with swing highs and swing lows. So let's move on. Dollar yen. So let's see how the slightly stronger than expected PCE affected the dollar yen. By the way, something that I forgot to mention is the fact that, okay, we have a pullback that's basically on the on yen gaining some ground against dollar. Something that I forgot to mention is that I am seeing currently the breakout of the PCE, and I can see that the saving rates, to be more precisely, they dropped once again. So this is this ties December for the smallest since last November. Yeah, that's a rate well below the May's peak, and it's comparable with and actually it's a 5%. Okay, so it's a 3.4%. So it's way below May's reading, which was at 5%. And if I had to compare it with the pandemic, where pandemic was at 32%, that's way lower. So what I'm trying to say is that this is the second straight month that we keep having such a fast PC deflator since January. Okay, that's the fastest since January. The core is at its fastest since April. So this is something that could keep inflation to the upside and could make that December rate hike unavoidable. So okay, dollar yen over here, we have a huge pullback, reversing back below 150. You know, 150 is a key psychological level. that that the asset managed to broke and extend above it just on Wednesday. So now that we are back to 150 territory, I'm sorry for that. That's obviously due to the yields. Yields have fell down. Dollar. So let me just, here we are, the 1 hour chart. Dollar is under pressure, so that is causing some flows out of the dollar yen. So 150 was broken. It was our immediate support level. This is the 1 hour chart. As you can see, it was an immediate floor from this, if I can call it rounding top. Is not an ideal rounding top, but yeah, it has broken. So the next support level lies down to 149.30, 35, 149.35. So can you see that? That was our previous ranging market, the bottom of our previous ranging market. So yeah, momentum remains to the downside. Let me set the, here we are. Okay, you can clearly see that. Look at this. Moving average are pointing down, just broken the first support of the day. Bollinger's expanding lower, MACD is negative, RSI that's at 28 and moving lower. Stochastic is a bit sideways, but yeah, it seems that the bears are in control intraday for dollar yen, with the next support level at 149.30. 5. Here it is, where it's just slightly below the second support of the day, so it's somewhere here. So coincides with the October's bottom, but also the bottom of weeks, actually 2 weeks support level. So 149.35 is the next support level to be seen for dollar yen. If it manages at the top of the hour to close below the 150 territory, below the first support of the day. Let me see what else is going on over here. Okay. Come on. So I would like to stick a bit on dollar yen. As you already know, it has been to the upside for a while now, in a kind of a perfect up channel since last November, so for a year now. And I would like to remind you that back in July last year, we had seen this kind of high levels just before an intervention from the Bank of Canada, which led to this sharp boost lower down to 124 territory, 125 territory from 152. So, and we keep actually having some rumors about intervention, and that's why that was, do you remember this huge pullback, this snap pullback? This happened on some headlines that hinted that intervention is nearby. So basically, overall, the outlook remains to the upside for dollar yen. So the next, after the break of 150, the next level to be closely monitored for dollar yen is pretty much the around 141 level and the 141.90. So 141 and 141.90. So, however, next into the next week we have Bank of Japan. So any headlines regards to intervention, any confirmation of about a potential intervention is something that could alert this such a repetition of what we have seen last year with a sharp dip to the downside. So keep an eye on any indications, any confirmation, any headlines in regards to Bank of Japan intervention. Okay, that could put back dollar yen down. For the time, we have the momentum remains to the upside with the asset. With the asset next resistance area at 151 and 151.90 territory. So let me see the questions. So yeah, so other than the Fed, next week we have Bank of Japan as well, okay? So it's very, very important to see whether they will ensure this, they will ensure it's a sustainable price stability, okay? If I'm not mistaken, they are Friday morning, okay? Friday morning. Yeah. Okay, let's move on. And we have euro dollar over here. Okay, euro dollar is extremely interesting for me. We'll start with the weekly chart because I want you to see actually daily chart. Let's do that first, okay? As you know, it has been in a consecutive in a long-term down channel until we see this kind of a flag. Let's say I zoom out, this kind of a bullish flag. You see this bullish flag, which signal the breakout outside of this 4 months decline. So it break it out, it remain above it for 1, 2, 3, 4, 5, 6 days in a row above it. So then we have the breakout of the 2 months, the 4 months down channel, okay, with the asset posting a fresh bullish pattern, which is in the form of a bullish flag. So we have a flip, a correction lower. However, the asset sustains a move outside the channel, above the downwards channel. Okay, so this is adding this is a signal regarding the beginning of a potential new uptrend to the upside for euro dollar. As long as the asset doesn't return to the down channel and it remains within the bullish flag, we will see further steam to the upside with with a potential return, why not back to 109. However, in order to return back to the 109 territory, we need to see the asset rebounding away from the 105 territory and extending and breaking the 106.90 level, which is above the 23.6 Fibonacci level, above the latest upswing that we have seen on Monday. Okay, and it will alert the resumption of this up channel, of this flag. So intraday now. So keep an eye on this formation, okay, guys? Keep an eye on it. That was a significant rebound because it was at historical levels. It was at 1.5 year support. So it rebounded at that level and started moving higher, indicating that this long downtrend might run out of steam, has peaked. Now, intraday. Sorry for that. Let me change actually. Okay, here we are. So this is the 1 hour chart of euro dollar. It's a bit messy. Let me fix it a bit. this is this is something that I used with in a webinar. So let me fix it a bit. It's a bit messy. So that works better for the 30-minute chart. Okay. Let me fix a bit this mess. Just a second. Okay. So here I'm using actually, okay, it's not so helpful. Let me just shift it again too. Okay, 25, and let's have a 10 as well. So over here, I have a 10, a 20, and a 5 simple moving average in the euro dollar in the 30 minutes chart and 1 hour chart. So I want you to focus a bit on where the what the moving averages are suggesting. So right here, okay, the asset has been in a consolidation since yesterday morning, so 2 days in a row. However, we have started seeing some swing highs, even though by connecting the highs, we can see that there is some near-term up channel, a bit narrow, the slope is a bit narrow, but interestingly, the 10 and 20 moving average have clashed above the immediate one, the 5, okay, with the 5 ready to cross above it. So if the 5 cross above both moving average, like what happened here, for example, or what happened here, for example, we could that could indicate some further boost to the upside. However, the next key support resistance area, sorry, remains a very strong resistance area, remains below the 106 level. So for the time being, it looks like sideways within the channel that I have just presented you. So let me put the 30-minute chart so you see 1, 2, 3 up. So will it manage to break it? If it does, 106 is the next key strong resistance level to the upside, which is likely to show a retracement on that level and a move back down to 105 level. So just okay. So so there is a bit of an indecision, okay, but regardless of what's going on, the technical perspective presents an upwards channel intraday. So we might see the asset failing to extend above it and pull back down to 105 and so on and so forth. So neutral to positive intraday, while overall, as I said, I want you to keep an eye on this setup that I presented earlier, which indicates a bullish flag with the asset returning back higher and holding above the 4 months down channel. So if the asset returns back to the channel, then the outlook will hold positive. If, however, we have a return back to the channel, that will indicate the continuation of a downtrend. So, oil, let's check oil. I can see some headlines regarding some Al Jazeera news. There was Al Jazeera news that there are negotiations in progress in order to achieve a ceasefire agreement. So all this might just provide some kind of a relief to the markets, but for the time being, as long as the yields remains high due to the inline PCE numbers, then we won't see the market settling or finding an appropriate direction. So this is dollar. This is oil. Sorry, this is oil. Let me just. Okay, and also we had actually a very interesting and tricky week ahead. I would like to remind you my setup. A setup that I created like weeks ago on these higher lows connected with the trend line. This is a key support level for the oil with some near term up channel over here reversing quickly down. So I will get rid of that. Let me just get rid of that. Where so bounce away from the trend line back in the beginning of the October, then up to 89.50, a sharp pullback back again, holding at the trend line and above the 81 territory, 81.70 more precisely. So we have the oil holding above my 4 months trend line, above the 200 day moving average level, and so the fact that it's holding gains, it keeps the oil in a positive outlook with indication to return back to 90 and 93, 95 territory if and only if we see it rebounding away from this trend line and breaching the 86 territory, which is the mid area of the last 1, 2, 3 months performance. Okay, is the mid of this is the mid of the 3 months performance. So since August. Right now, it's moving sideways. So for 4 days in a row, it has flattened between 81.70 and 85 levels. So it's bouncing. So, okay. However, overall, I want you to know that the oil remains positive. It has seen more than 30% rise in the third quarter. Okay. So it remains bullish. Sorry for that. Yeah, it remains bullish because, especially ahead of the weekend, we are expecting more and more conflict in the Middle East, something that it adds to the concerns about supply restrictions. So further the more the conflicts, the more the tension, the more the fear regards to supply restriction, and the more the US oil will benefit, will jump higher. Okay, so if I zoom out, so overall outlook remains positive. Is currently sideways the last 4 hours, but a break of 86 level could alert the return back to 90 or even 93, 94 territory. Remains to the upside. Momentum is a bit sideways, a bit neutral. It's at 46, so there is a lack of positive bias. There is a lack of bullish momentum. Okay, it's Friday. We must see some repositioning, so that might also be it. But I would like to have a trend line on the RSI just to monitor how whether it will finally break it and close up and extends higher, something that could indicate the resumption to the upside for oil. Now, intraday, okay, intraday, as you can see, it's pretty much the same story. It's pretty much the same story. Sideways, 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 jumped overnight, sideways, time correction. This correction was due to the inventories. Sideways time correct indicate again, hit it again higher. Um, um, Supported on the anticipation of PCE, on the fact that stocks were in a sell-off, and is sideways the whole day today. So the intraday picture is a bit dodgy. It's a bit sideways again. So it's not interesting, if you ask me. But let me just provide you some support and resistance levels as well, so to be helpful for any intraday traders over here. So in a pullback, the next support is down to the pivot point of the day. However, the momentum is extremely weak, guys. So you see MACD is flat and very close to zero. RSI is at 45, but again, it's not pointing sharply to the downside. So that's the next immediate support, is the pivot point in which it could pause its decline over there. Okay, because can you see that moving, the stochastic has already bullishly crossed, so that indicates that it might settle over here, okay, and not extend down to 83. So you might found some ground over here and pause. But obviously a break of the pivot point, it opened the doors to the round 83. But in general, this pullback that we have seen is just some swing highs, swing lows, keeping this range in market that we have seen since the 24th of October unchanged. So down, any move up to 83 could alert a rebound, any move at 85 a pullback, and so on and so forth, until it breaks significantly any of these barriers and takes a new direction. Overall positive intraday, sideways with a retracement away from the top of the range, with the next immediate support at 83 level. Pound. Yeah, a lot of okay. This is cable, which has settled as well, guys. There are some. There is a. Let me just. So there is a lot of sideways movement ahead of the Bank of England as well. But in regards to cable, you can see that this decline, similar to euro, this long downtrend has paused in October. So is this the end of the downtrend? Is this the development of a new trend coming, an uptrend? Who knows? What we could see over here right now is that, let me just, is that the asset remains within a channel. Okay, let me fix it. Okay, within a channel, and let me also Okay, so let me get rid of the rectangle. I want to show you that it remains in a range, flat though. So this should be treated by you. These two, can I? No, I can't. This area, I cannot draw it. Um, uh, I cannot draw it actually. Okay, but I think you get what I mean. Look at that. This area, so I put two regression channels with different deviations, okay, with different standard deviations. So the gap between them provides you resistance levels. Okay, the middle one is 122, and the very top one is at 122.70. While on the flip side, immediate support level lies down to 120.40, 120.60, sorry, and down to 120.15 territory. So these lines that I have drawn based on retracement of standard deviation, there are support and resistance areas that you can use with any rebound or any reversal of the cable. So right now we have seen a reversal, and that's an evening star formation, morning star formation, sorry. But since that rebound, we have seen the asset, okay, sideways, but moving higher and higher, failing to break the mid of the channel. However, keep an eye, because a break of that level, a break of 121.50 level, it could open the doors, actually 121.55, sorry, 121.55. It could open the doors to the top over here and the 122.30 level. Okay, so keep an eye at the mid of the regression channels that I have just pointed out. Remember that that's similar to euro dollar. Okay, there is a lot of, there's still even though it's still in a range, right, and it's bouncing up and down within this range. So this is because the market is still focused on the Middle East, and we have some risk on, risk of modes all the time. So pretty much over here we are seeing the dollar moves rather than pound moves. But the Bank of England meeting is next week. Okay, so dollar moves will remain, because it's the Fed as well, will remain the main driver of the asset. Okay. However, any surprise from the Bank of England could change the situation here. But for the time being, the Bank of England is expected to also keep the rates unchanged. But if for any reason we see any surprise from them, that could support pound. Okay, but if nothing happens, and if indeed all the central banks, the Fed, the Bank of England, just keep the same approach, holding rates unchanged, etc., the cable will remain dollar driver, and without any sterling developments affecting the pound. So focus on the technicals in regards to cable, especially if we don't have any surprise from the banks. So I think I covered all of the questions. Gold is selling now. Guys, it's Friday as well, okay? So it's Friday. We have, it's the final day of the week. Markets are a bit cautious, closing position, prepare for the week ahead. and etc. And the fact that the PCE came in line with expectations without changing anything in regards to the inflation, in regards to the Fed, and etc. That's why we have seen we have seen that the overall sideways the range in market remains. Okay, so this look to be, my dear friend Peter, looks like a limited move. And here we have stability, we have steadiness. RSI flatten, market flatten. Stochastic has a bullish cross, but very weak for the time being. So we might see this swing up, swing downs continue until the closure tonight. Let me check something. The Wall Street has opened, obviously. Oh, no, it's about to open in 7 minutes. Sorry. I can see Amazon up pre-market by nearly 5%. So keep an eye on stocks, guys, because we had Meta and Amazon being the ones that they had a very solid profit so far, more precisely Amazon. In regards to the Meta, it was the advertisement sector and the sales over there that boosted the asset. So because of Amazon, we might see a positive rebound. We have actually seen a bit of a rebound in the US indices. This is Nasdaq on our chart, but yes, you see rebound initially. We might see extending higher on the open in 6 minutes, but still. And you see this line that I have over here. This is the year's support. Okay, year's support. As long as it doesn't return above 40,570, the Nasdaq remains in an overall negative outlook until the year end. Intraday, as I said, rebounded temporarily sideways so far. It is expected to open positive once the US market opens due to Amazon, but as long as it doesn't extend up to 14,500 territory, this is expected to be a limited move for the Nasdaq because overall the stocks remain under significant pressure. So let me just here we are, also below the 38 Fibonacci level. So just technical suggests that we have some corrections, or we will have some correction, limited one, before finally turning down to 13,900 territory. So intraday bullish, it's expected to be a bullish open for indices, but overall they are under pressure. Guys, I think that's pretty much it. Cannot see any further questions, so I'm gonna call it a day because it has been an hour and I'm a bit exhausted. But I want you to stay tuned with what we discussed today. The geopolitics are still on the agenda. There are some small bits into the weekend, okay, due to the latest headlines in regards to any possibility of a ceasefire. So that's still on. But because the markets do not see any risk for the Fed next week, from the Bank of England next week, from the Bank of Japan next week, that's why we are seeing all these sideways movements. Okay, so that's pretty much it. I'm gonna call it a date. Thank you very much. I know I don't like when the markets are a bit sideways. I feel a bit demotivated, but that's just intraday. We have some important key levels being triggered. As I said, the Nasdaq and this year's support has broken this week. The same stands for S&P 500 with the again year support at 4200 has broken, so it's in a sell-off. Gold finally reached the retest, actually hold gains, and it keep testing the 1990, retesting the 1990 territory, with the overall outlook for gold remains positive. Oil holds above my trend line, indicating that there are further, that the overall outlook remains positive. Okay, so that's a bit of a correction. As long as it remains above 200 territory, the overall outlook remains positive. Dollar CAD, it has been a surprise for me, to be honest. I had nearly 2 years, no, more than a year, descending triangle, broken. Okay, broken, as you can see, extended up to 61.8 Fibonacci expansion, posting 4 months up channel, and keeps boosting higher, indicating that it might return back to 139 level, or even 139.70 level. Yeah, keep an eye on that bullish flag for euro dollar. And that's pretty much it. Okay, so I'm gonna call it a day. Oops, I left Peter saying that gold is only selling in. So thank you very much. Take care. Hope you're gonna have a great day ahead. Stay tuned. And I wish you a very happy and safe weekend. Thank you. Bye bye.